Hi, Matt McAleer, President, Cumberland Private Wealth, with John Mousseau, Chief Investment Officer, Cumberland Advisors. After a wild and woolly week that, again, the broad index numbers mask. Right? You look and you say, well, that wasn't much action. Couple things to talk about. One broad and one kind of funny story. There's a wildfire raging through the markets in terms of AI.
Appropriate enough on a Friday the 13th week.
There you go. And a wildfire, as people unfortunately understand, can go in any direction, and the wind can take it this way, can take it this way. You have almost no protection against it. And that's what we're seeing as traders and investors try to come up with ramifications of AI becoming a dominant technology force versus software. And then on the flip side, how do companies use that to increase efficiencies and so on and so forth. But today, those decisions are made on a day-by-day, week-by-week, when in reality, we're talking about longer periods.
Takes a long time.
A year, 2 years, 3 years to even come up with cases that you're convinced work for you as a company.
Which shows you how much emotion gets built into this, right?
The emotion is wild, and that's going to be my funny story. I told you this earlier today. Software, again, just ducking and bobbing and weaving and trying to keep their head above water as the story becomes they're going to virtually be put out of business. Again, as I said last week, I find that hard to believe. Much of the software companies that we look at are integrating AI to the point that AI needs them desperately to have an outlet, right? I have a story to bring up that gives you some context to this wildfire and emotional pull in the markets right now. The transportation stocks, out of nowhere yesterday, transports have been trading beautifully at all-time highs last week. We saw some of the big ones, Landstar, C.H. Robinson. Companies in the transport and transport logistics business were down around noontime yesterday. 15%, 16%, 18%. I'm looking at RXO, part of the XOs, if anyone knows XPO, RXO, GXO. They're a wonderful franchise in the ground transportation business, a business we don't hear an awful lot about, but is powerful, these companies. And one thing that might seem odd, they are technology machines, these companies.
Right, sure.
When you have to logistically get freight efficiently from point A to point B, make sure you can not waste time coming back, and so on and so forth. They use AI. They have software that they've been light years ahead of many of the industrials.
You bet.
Okay. So the Russell Transport Index was down about 8%. I'm like, what the heck is going on here? I see some down 16%, 7%. They're like the software companies.
Right.
I'm like, wait a second. These are the truckers.
Why are they catching a cold?
I'm digging around, and I'll get to the end here because I don't want to take up all day here. So I talked to a couple people. I go into ChatGPT. I go into Grok. I go here. I go there. There was a small company, public company, that had a press release and a white paper attached to it, claiming that they had created through AI a logistics AI agent that could, create seamless pickup, delivery, cut down on empty miles, everything these
We have a better mousetrap because we say we have a better mousetrap.
Right. So I said, who is this company? I'm not familiar with them. I look them up. I said, holy crow. It's a $15 million market cap company. For people that don't follow market caps in general, a 15 million market cap company is that Dairy Queen over there. That's the size of this company. And I dig in a little more to them. Who the heck are they? You're going to laugh, Moose.
Yeah.
6 months ago, do you know what this company was doing? They were making consumer karaoke machines. And today, they're releasing a press release that knocks tens of billions of market cap down in an industry that's almost impenetrable.
Incredible.
That's emotion. That's shoot first, ask questions after. Get me out.
Yeah. Crazy.
And you're seeing it in software. Now you're seeing it in transports, and that's that wildfire. It's going left, right. Wealth management. Wealth management is now going to be replaced by an AI agent. Here's the portion that probably isn't mentioned enough. Wealth management's primary job is to control behavior and emotion within the markets and allocate capital properly. If an AI tool is going to be able to control your emotion day to day, John,
God bless him.
God bless him. So anyway, you saw the Morgan Stanley's and KCE. That's an ETF that's heavily into capital market companies. You saw them down the other day, 7%, 8%, 9%. Yeah. They're going to all be replaced by an AI agent. And by the way, as you know from my conversations over the years, I'm pro-tech. I say once tech starts going forward, it never comes back. So I use AI. I think it's wonderful. I think it has efficiencies to it. If you think it's burning down all these industries in the next 10 years, I've got a bridge to say.
Yeah.
But anyway, that's my story. Beware of consumer karaoke companies releasing press releases. Moose, what do you got in bonds?
Well, all this consternation that was over on the equity side translated into lower bond yields because people said, maybe I'll go,
this week.
I'll go out and hang out in treasuries. Treasury yields down across the board about 14 ticks. 10 years down to a 407. That's down 14. 30-year 471 down 14. 5-year down 14 to a 362.
Remember, down in yield is up in price.
Correct. Smaller drops in yields in the municipal bond market, but again, another solid week with inflows into bond ETF, muni bond ETFs and muni funds, about $1.6 billion this week on top of $2 billion last week. Solid demand across the board. The numbers were backed up. The jobs number surprised people. 130,000 jobs created. This was the delayed jobs number. They were expecting 65,000. However, when they looked at 2025 and the revisions for the whole year, that knocked all the jobs that were created there out. So not that you dwell on the past, but it shows you that there's some softness out there in the economy. We don't need as many jobs, of course, because of immigration being down. But some other things were down too. You saw, housing starts down 8.5% almost year over year, month over month, excuse me. That's a big number. Does it continue? We don't know. But when you look at it, you say to yourself, people are saying maybe at the margin we'll have a little more in bonds, and that's what's going on.
Yeah. Well, it makes it exciting.
Yeah, it does.
I know it can be a little irritating to get securities, pulled, jerked, cut in half, rally here, rally there. We've been through this many, many times. It does remind me of the AOL message boards of 1998, 1999 into 2000, and we're dating ourselves a little bit, but where you'd see stocks move 100%, fall 50%, all on nonsense.
Yeah.
And it eventually got washed out. It didn't mean the technology got washed out. The emotion got washed out, and numbers came to mean something again,
right.
And profit margins and growth. So one thing we were pretty consistent with heading into January was we were going to lean against the popular strategist opinion this year, which was uniformly up, nowhere else to go but equities. When I reviewed that and we spoke about this a few weeks ago, you have to lean against that. Do we think the market's going to run into trouble? Maybe, maybe not, but I think we're going to see a good dose of volatility, which, as you know, volatility is different than risk, and volatility creates
opportunities.
Pass
Pass my test.
Enjoy the weekend. We'll see you next Friday.